Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today on our weekly templates. We're going to review the process, the playbook, opening range, initial balance, Monday, Tuesday, Wednesday, day 1, day 2, day 3. We're on Wednesday today. We're at the midpoint of the week. We're going to talk about 3-day setups. We're going to talk about Monday, Wednesday, Friday, 3-day templates. We're going to talk about day 3 breakout traders in the market and understanding how all of that coincides with the overall template. So stepping back, coming to the screen in the session that you are trading and being able to identify a best trade candidate, instrument selection, and then looking at the template itself on the day, how it's set up, and then you either will have a pump and a dump opportunity for a free cash parabolic opportunity, or a dump and a pump free cash parabolic opportunity. And in some cases, it may just be low-hanging fruit for a continuation trade, no stress, zero emotion, free cash, 25 to 50 pips, whatever that instrument avails to you. But we want to identify the 90-10 possibilities, eliminate the 50-50 garbage out of our trading, and stick to the highest, best opportunities that give us edge in the session that we are trading. So just to recap, Monday, Wednesday, Friday is our day 1 opening range, new week, new timing cycle, opening range high-low. Now, if we break other boundaries, a new daily low, breakout traders in the market, day 1 shorts, day 1 longs, whatever that may be. We'll look at some different examples of that. Monday is the opening range for the new week. Tuesday, day 2, sets the initial balance. So if we break a boundary or continue a move, for example, Monday triggers day 1 shorts, Tuesday can trigger day 2 shorts. But in a high percentage of cases, 80% or more, one of those boundaries will tend to hold for the rest of the week. It may get broken again, but it may be the low of the week or the high of the week by the time Monday and Tuesday have traded. Wednesday is where we look for our day 3 parabolic opportunity, whether that is a parabolic trend trade or a parabolic reversal trade. So again, Monday, Tuesday forms our box. There's our high, there's our low. Now we either will have a continuation trade, a trend trade, or a reversal trade, or you're looking at an instrument that has no setup at all, but you're trying to trade it. So that's what I want you to think about. We're looking for the best setup, not trying to figure out where's it going today, let's trade it. We're looking for the best setup that shows us where we have edge. And on Wednesday, we can get parabolic opportunities in Asia. We can get them in London, and we can get them in New York, depending on the session that you're trading and the instrument selection in your basket that helps you identify the highest probability opportunity in the session that you're trading. When we reset now on Wednesday, Wednesday becomes our new day 1. It's the halfway point of the week. Monday's our opening range. Friday's our closing range. So Wednesday, Thursday, Friday can offer us free cash Friday for a day 3 parabolic on Friday. We may get day 2 opportunities. We may get best trade templates on a Thursday, day 2 for either reversals, continuations, or just session scalps from high of day to low of day to high of day, whatever that may be. But we want to be able to identify the best candidates for easy, low stress, zero emotion trade setups. Now, reviewing again, Monday, Wednesday, Friday. That's our Monday to Friday template. Day 1, day 2, day 3. Day 1, day 2, day 3. Within that, we can have 3-day setups, high of week, low of week, failed breakouts. So when we get a failed breakout at a high or a low of a week, that begins our day count within that Monday to Friday template. We can have something from a Friday going into Friday, Monday, Tuesday. We can have something on a Wednesday that goes Wednesday, Thursday, Friday. And then we have day 3 breakout traders in the market. And we're going to look at some specific examples of these templates. Before we do that, I just want to review what a session best trade setup will look like within that bigger template. We can have parabolic trend trades for range expansions. We can have parabolic reversal trades, high of week to low of day, high of week to low of week, low of week to high of day, low of week to high of week. Or we can just have a low-hanging fruit continuation trade, the easy go-to trade setup if there's an instrument that's been overextended and it offers us that setup. When it all boils down to it, we will either have A, a pump and a dump, or B, a dump and a pump. Those are the only 2 types of trade setups that coincide with the best trade setup opportunity in the session that you are trading. I want to read this quote again because it's so powerful and it reinforces the understanding of sitting on your hands and being patient and allowing the market to set up for the easy money. As Jim Rogers says, laying over in the corner on the floor, and all you have to do is walk over and pick it up. Although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, preferably one that is sick or lame. Only then, when there is no chance it can lose its prey, does it attack. That, to me, is the epitome of professional trading. Mark Weinstein from the Market Wizards book. We talk about this in the Playbook: planning, preparation, and execution. Pump and dumps, dump and pumps. Why most traders lose. The importance of yesterday's high and low. The opening range and initial balance. Timings. And then knowing if there's any major red news on the calendar. The basic model for all trade entries. And this was established so that there was some continuity and ease for traders to recognize the easiest, best trade setups without any analysis paralysis. And then we talk about the 3-day setups, the 3-session setups, understanding Monday's opening range and initial balance, and then trigger days. Day 3 longs, day 3 shorts, first red day, first green day, the inside day for false breaks and trend trades, and then the parabolic trend trades, day 0 setups, parabolic 3-session setups, parabolic short squeeze reversals, low-hanging fruit trend continuations, and the first bounce opportunity on major red news. I've talked about asymmetrical risk reward. You can review the videos, but that's why I focus on classical charting, rectangles, geometrical structures, ascending, descending triangles. Paul Tudor Jones, when you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. Just take a quick look at some of the pairs. We can see that on Wednesday, the market broke down last week, heading into our new week. We have a new day 1, but we have on Friday, we have a market that pushes higher. Doesn't break out, but it pushes higher. That's our closing range for the week. And that also closed as a first green day. First green day is a buy low opportunity if indeed it presents. We had a failed breakout at the low of Thursday. That's the breakout that failed. That starts a new day count in a 3-day setup. And we had an opportunity again where the market tried to push higher on Monday a second time. So we had first green day, 1 push, 2 pushes and then the market auctions back down on Tuesday. So we have our opening range on Monday. We have our initial balance on Tuesday, lower low, higher high on Monday, lower low. So we have one push, two pushes, the lower low that resets. But we also have markets that have closed 3 days in a row above the opening prices. That's 3 higher closes. And we have markets that have closed above the first green day close. And that sets us up for a possible day 3 reversal trade in the Asian session that presented in Asia for a market that was working back towards breakout traders from the breakdown on Wednesday through Tuesday's low. So day 1, we have 3 days of trap volume underneath. And if we drag this across and we just look at this chart and understand the psychology behind best trade setups, we have volume trapped 1, 2, 3 days into the close of the week. First green day, a buy low setup. Day 1 on our Monday to Wednesday 3-day setup. Day 2, initial balance, closing sideways in consolidation underneath the high of the week for a continuation trade on free cash Wednesdays. So trap volume begins a 3-day setup on Friday, Monday, Tuesday, closes again as a 3-day consolidation above the close of Friday night. Our closing range for the week for a continuation trade of just underneath 100 pips, I believe, back to breakout traders from Wednesday's breakdown. Just in simple terms, we have day 1, day 2, day 3 continuation that now becomes an opening range breakout. So an opening range breakout, we have our new high-low for the week. That market has closed out of balance outside of the range, and we are still above the high of our new week. If we take a quick look at the Euro odd, we have first green day on Friday, our closing range for the week, Wednesday, Thursday, Friday, parabolic reversal. Day 2, our Monday opening range goes higher. Monday, Tuesday, we have 3 days of breakout traders now in the market, but we go parabolic on day 3, our Wednesday, free cash Wednesday, which gave traders an opportunity in Asia, in London, and a reversal opportunity in the US session. Monday, Tuesday, Wednesday is our day 1, day 2, day 3 in a new template. And if we just go back and reset that for simplicity, Monday's our opening range. Tuesday goes higher, our initial balance. Wednesday breaks out and trends in the direction of the breakout. And if we draw our line at Friday's high, that can project a level across day 1, day 2, day 3. There's our 3 push stair step through the high of Tuesday. 1 push, 2 push, 3 push. Now we wait and watch. This may give us an opportunity on Friday for a reversal. We don't know, but in terms of the overall template, we have a bias heading into the day, whether you're trading Asia for a continuation trade, London for a continuation trade, or the US for a reversal trade. Now, if we look at each day on the Euros, we can see the breakout in Asia, the continuation higher in the Europe-London window, and the reversal trade in the US session. The market pumps up, 1 push, 2 push, 3 pushes into the US window for a parabolic reversal. We had an opportunity in the Asian session to continue that move for 3 levels of rise and a reversal. On Tuesday, day 2, the market eventually went parabolic in the London window and gave a 3-session parabolic reversal opportunity in the US session. 3 levels of rise for the reversal. On Wednesday, the market continued to go higher in our Asian window, parabolic trend trade on day 3 that made a higher high and set up for the higher high dump and pump in the London window that went vertical 3 levels for the parabolic reversal trade in the U.S. session, day 1, day 2, day 3. If we look at the Canadian dollar, we can see that Friday closed as a first green day, but you'll also notice that when we come back to our Wednesday to Friday template, day 1, day 2, day 3 reversal, that Friday has still stayed inside of the breakout of Thursday's low. And that formed our Monday high-low, went vertically back inside. We triggered the new highs of Friday before failing and going parabolic on Monday for our day 1 opening range. That sets the high and low for the new week, the initial opening range. You can again look at the low of the day, the pump up to the high of the week for a day 2 high of day, high of week shorting opportunity in the U.S. session in the New York window for a vertical parabolic move back to the low of the day. And we had a 3-session, 3-level shorting opportunity in the U.S. window. Day 1, day 2, day 3. Now we had 3 levels of rise. We had a consolidation in the upper quarter, a failed breakout at the high of the new week up top, the quarter level. And then a parabolic shorting opportunity in the U.S. session on Monday, our opening range. We had a textbook perfect template on day 2, our Tuesday, 3 levels of rise for a high of day 3 session shorting parabolic opportunity on day 2 from the high of the week. I want you to look at this template. Asia 1 push, 2 push in London, and a 3rd push in the U.S. session that made a lower low first. Lower low on the inside is the setup for the pump and dump. We see the exact same template, different volatility on Wednesday, day 3 for the 1 push, 2 push, 3 pushes, pump and dump in the U.S. session on day 3. We look at the Pound Australian, we have a first green day on Friday, day 1 breakout traders in the markets. Day 2, our opening range on Monday is day 2 breakout traders in the market. So if we bring this failed breakout level across from Thursday's breakout of Wednesday's low of day, but we have first green day Friday, Monday, day 2 longs, Tuesday, our initial balance day, day 3 longs for the parabolic reversal opportunity high of day, high of week in the U.S. session, which closes as a first red day. First red day, we want to see trapped volume up top for the shorting opportunity, whether that be in the Europe-London window, end of Asia, continuation low-hanging fruit in the U.S. session, and then the reversal opportunity, low of day, low of week, 1 hour, 2 hours, 3 hours, down at the bottom of our month and our week. Day 1, day 2, day 3. Day 1 breakouts, day 2 breakouts, day 3 breakouts. A 3-day setup, but also opening range breakout that fails gives us a first red day, a trigger day for a thesis of high of day, high of session shorting opportunity, whether that be in Asia, London, or New York. If it's continuing down, we're looking for the low-hanging fruit, the continuation trade in the New York session. We have templates where we actually don't break levels in our new week. We have our day 1, our opening range. It's an inside day. We have a market that pins through the low. So we have day 1 to the bottom of the markets. That's our 1 push pattern. But if we go back and look now, once we've triggered this level, that Friday's breakout of Thursday's high may indeed be our peak formation failed breakout for beginning a day count. Day 1, day 2, day 3 still inside. Closes as a first red day on our Tuesday. And we get a high of day, high of session shorting opportunity. There was major red news in the London session on the British pound. But we get the low-hanging fruit continuation trade in the U.S. session. This market collapsed right into the open of the U.S. session. right down through the low of the day, the low of the week, and then reversed after the 3-hour window, pulling back up 3 levels of rise. So we fell 1, 2, 3 levels before consolidating, taking the low out, and then coming back into traders who were short heading into the close of the day. Day 1, day 2, day 3, with a major news catalyst opportunity. 3 levels of rise, pump for the dump into the U.S. session. My point with today's video is that my responsibility to myself is to hunt out the best template and then the best setup in the session that I'm trading. So we can have a thesis, a bigger template, Monday, Tuesday, Wednesday. We can have day 3 breakouts in the market. We can have 3-day setups. But when it comes down to entering an actual trade setup, we want to have a dump, consolidation, pump for a long trade, or a pump, consolidation, and a dump for our short trade. And it's as simple as that. So we're looking for either parabolic trend trade opportunities or parabolic reversal trades. And the go-to setup, if there's nothing else that looks crystal clean and there's already a broken out market or a market that's continuing to trend, it's either going to be a reversal at the extreme after a retest, or we're going to get a 25 pip approximate stop hunt, pull back, and then the low-hanging fruit continuation trade, as we've spoke about in the playbook. So keep it simple, traders. There are only 2 types of trades when it boils down to execution: pump and dumps, or dump and pumps. Keep it simple. Study your templates, master the best trade setups, and may the markets go with you.